from Gem Capital, joined today with Paul Xiradis, CEO of Ausbil Funds Management. And today we're talking about the market generally, which has had a pretty good run through the banks, some of the major retailers and healthcare stocks in the last 6 months. Paul, do you think investors should be concerned we've had such a strong run in the last 6 months?
Look, the market has certainly recovered very, very strongly from its low point. And I think part of the reason what has driven that recovery is the view that the worst is over financially from a financial market perspective. Now, the last 4 or 5 years, particularly in this country, we've been concerned about what's happening in Europe in particular. We've been concerned what's been happening in China, the US and the like. But all those areas, I think, are slowly but surely being addressed. And in fact, we have quite a positive outlook looking forward as far as global growth is concerned. So that's translated into a better market, and we have seen a very strong recovery. You've got to bear in mind that the equity market at its low point was very inexpensive, very cheap.
Yes.
So therefore what we have seen is a recovery back to more normal levels, and now what we need to see is earnings recover and recover quite substantially over time in order to drive the market. Our view is that will occur, and it could be the start of a multi-year run.
And what are the sectors that you're favouring, just as an overall a snapshot? Sure.
Look, there's a number of sectors which look reasonably attractive to us. When I was saying earlier, the market was actually quite inexpensive. It got to very extreme levels as far as being cheap, in the sense of if you look at most traditional measures. But within the market, there's also a lot of stocks which, based on historical terms, also look incredibly cheap compared to the historical average. So stocks which have been defensive stocks by nature performed exceptionally well. Those stocks which are more attuned to the domestic economy, as an example, suffered and suffered quite dramatically. That's where we're fishing right now. We're seeing where there is value at that bottom end, because we do believe that we'll see a pick-up in activity, we'll see a pick-up in earnings and a pick-up in valuation.
And that's already started to happen, seeing the performance in your funds. So
yeah, I mean, we have been positioned that way for a time. I mean, the trap always is trying to be positioned a bit too early. Yeah. But the thing is, I didn't want to miss the party, because the whole thing was the market was so cheap that you needed to be there and be positioned before it actually occurred. Because as we know, I mean, we've seen a 31% increase and it's happened rather quickly. Yes. And a lot of people are still scratching their head trying to work out why that's the case.
Yeah, exactly. Paul, thanks for your time, and appreciate your thoughts on where the market's at the moment.